Welcome to another Wall Street Informer production on WSI TV.
Welcome back for another Friday edition of WSI TV. That's Sean Bauer, I'm Jordan Bishop, and today we're going to show you how to get a 100% success rate from zero experience. Now, in order to do this, you're going to have to avoid the common mistakes that beginners make, right, Sean?
Yeah, that's right. I mean, in pretty much all of our material, whether it's something like Retirement Underground or Codebreaker, we show you how it's easy to make money trading, how it's easy to get winner after winner. The problems often arise whenever we just make mistakes ourselves, and they're really beginner's mistakes, but even the most experienced trader can make it. So the first one we want to address here is not using a stop loss. A stop loss should be included with every single trade you ever make in your entire life. I think Jordan would back me up on that.
Right.
We use them all the time ourselves, and more so, it's being disciplined with that stop loss. It's really, really easy to let emotion creep in and move your stop loss down a tiny bit just because you think this position will come back. Oftentimes, it's just going to keep falling through the floor, give you bigger and bigger losses on trades. So if you're really disciplined with small stop losses, something like 5% is our general rule of thumb. It's a really good way to make sure you're never getting big losses in your portfolio. But that's just the first mistake to start us off, Jordan.
Yeah, definitely. And just to add on that, Sean, I know a lot of people will close their trade out even if the stock's down 4%.
Yeah.
Now, we obviously want to let these stocks breathe because, you know, they're like elastic bands. They go down and they'll go up twice as far. So
yeah,
just keep that in mind.
Absolutely, really good point. They do need room to move around. So yeah, very good point.
So that's why we give 5% generally. But another big thing is, and I know when I first started trading, I made this mistake, listening to all the noise on the news, what we call the fundamental news. You know, we're technical analysts. We look at the charts, these fundamentals that you hear every day about how this stock is going to bomb, this stock's going to rocket. You know, it means nothing to us. And for your trading, you need to completely block out all that noise, whether you're in the trade and someone's saying it's going to bomb, or whether you're looking for new trade. You know, this is a big mistake that early traders make by letting that noise inside their head.
Yep.
You know, but there's a specific way that we sort of combat that by you know, averaging out our different trades, right, Sean?
Yeah, that's right. What we generally tell beginners, or even experienced traders, I should say, is splitting up your capital roughly into 10 positions, so 10% each should be on any given trade at one time. Now, a big mistake a beginner can make is allocating 50% of a trade to one stock that looks really good and just 10% to another stock that you may not like as much. Whenever you're working with a system, like I said, something from Retirement Underground maybe, which a lot of our materials teach, you need the same exact amount on every trade, or, you know, as close as possible as you can get to that. Because one big loss on a 50% position is obviously going to ruin your portfolio. So it's really, really important to use the same amounts on all of these positions, which is even how you can lose more than you win and still come out with a profit. Isn't that right, Jordan?
Right, Sean. And one of the biggest mistakes beginner traders make are riding their losers and cutting their winners. Now, we've already spoken about taking the emotion out of cutting the losers, you know, with our 5% stop loss. But riding the winners, it's almost as simple. You know, I mean, there's various things you can do, but what we would tell you as a beginner trader is keep your stop loss rising within 5% of the stock's price.
Yeah, I mean, I can remember myself as a beginner seeing the money in the green, seeing the cash right there that I just want to grab, just being greedy about it, I guess. Whenever you're moving your stop loss up, and like you said, I think we try to keep it within 5%. It's going to depend based on what the position, what the stock is doing. But if you keep moving that stop loss up, you keep taking emotion out of it, and you just keep riding those winners as long as the stop loss is still untriggered.
So by avoiding these beginners' mistakes, you could get your 100% win rate. Now, when talking about this win rate, we're looking at your portfolio as a whole. We want to analyze 10 trades at a time. And if you use your stop loss, your 5% stop loss, and let the winners ride, you could lose 6 trades and then win 4, and your portfolio will still be out on top.
Yeah, that's right. I mean, you can't look at individual trades here. You have to look at the entire portfolio based on all these mistakes we're talking about.
Right.
But I just want to kind of wrap everything up by saying you're going to have to learn a lot of these lessons on your own if you are a beginning trader. it's just going to be something that you have to have skin in the game to learn yourself. So I would recommend starting with small amounts. Maybe don't divvy up your entire capital into 10 positions. Maybe start a little bit smaller until you're really comfortable, until you've passed all of these mistakes, and then you're good to go.
Exactly, and I can't stress how different the first few years of my trading would have been if I would have had this, these guidelines, these mistakes already laid out for me. So watch this video a couple times over, take notes if you have to, and implement them into your trading. Well, I appreciate you being here, Sean.
Sure.
We'll see you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.